This is part of the way the government views taxation. Is it's a kind of wealth redistribution. It not only goes to pay for the expenses of the government, but embedded in it are social programs to help the poor. This is the reality we live in, and so we want our clients, we want you to take advantage of every available deduction that you can. Hi friends, Colin Richards here, and we're back in this episode of the Lord and Richard Show talking about how to simplify taxes. And again, I want to remind you that I'm not sharing this with you to memorize over YouTube or the radio or our podcasts, but to understand that there are critical issues that affect your life. Because overpaying taxes is not only bad stewardship, but it's going to hurt you. It's going to take money from the things you really love and enjoy, people, experiences, and so forth. And so at Lord & Richards, we want you to help you get ahead of that through our Retirement Freedom Review. But this review is important whether you're retired or not, because as part of this, we're going to give you a full tax picture of where you stand, and we're going to begin to set in motion the wheels of a plan to reduce your taxes, both now and in the future. The decisions you're making right now are having huge implications, and they compound as the years pass by. So in this segment, we're going to dive into the idea of deductions and credits. These are great, right? We want as many of these as we can. Now, deductions are awesome because it reduces income, and therefore, as a result, reduces your tax. But credits are even cooler because credits is just money put back against your taxes. Things like having children allows you to sometimes even net positive from the government. There are people who, because of low income, are actually able to get a credit from the government. This is part of the way the government views taxation. Is it's a kind of wealth redistribution. It not only goes to pay for the expenses of the government, but embedded in it are social programs to help the poor. Now, whether you want to debate the merits of that is a separate discussion, but this is the reality we live in, and so we want our clients, we want you to take advantage of every available deduction that you can. So a deduction is an amount that is deducted from your income. So if you made $50,000 and you got a deduction of $10,000, now your income before taxes is $40,000. So let's talk a little bit about what those deductions are. Okay, there's a standard deduction. Okay, there's a standard deduction that can go as high as $30,000 for married or $15,000 for single in 2025. If you are 65 plus or you're blind, you get an additional $1,600 as a married couple per person, or $2,000 for single in 2025. So very high, and for most people, that's enough, right? Just the standard deduction, because the alternative is to go to a form on your tax return called Schedule A and just start listing out things that you hope to deduct. And it's pretty hard if you're working a normal job and have a normal life to come up with a whole lot of deductions that would equal or exceed $30,000. So for a lot of people, that's a great one. That's a freebie from the government. It's been handed to you. It was greatly enlarged in the Tax Cuts and Jobs Act, and there's no guarantee we're going to have it forever. So take advantage of it. But if you have the potential for higher deductions, you have a business, you have other types of expenses that you can deduct, charitable giving, and so forth, then we want you to itemize your deductions, okay? So whether you're doing your taxes or somebody else is preparing it, make sure you keep track of the dollars that you spend that are deductible and count against income. Now, credits, as I said, are really cool because they're designed to incentivize your behavior to do certain things or to be in certain situations. So now the first one I'm not going to say is an incentive. That's a healthcare tax credit, right? Most of us would rather not have to spend a lot of money on our healthcare, but it's there, right? We also have the earned income tax credit for those who make below a certain threshold. And again, these are dollars that just go right to your tax return, and some of these are refundable. That is, you literally get a check in the mail. Foreign tax credit we won't get into. There's a credit called the Savers Credit, really designed to incentivize your behavior. And then the child credit, right, where you get actual dollars put into your pocket based on the number of children you have. Okay, so that's awesome. So here's a quick question that I want to ask you. Do you know, have you figured out whether you're in a position to benefit from some tax planning to take advantage of taxes being on sale. Do you know that? If you don't, let us help you. We're going to give you a full comprehensive view at Lord & Richards of your tax situation and identify spots where you can make adjustments in maybe how you're claiming, how you're taking deductions, what kinds of credits, but also things related to your investments, which we'll get into in future episodes. Okay, how do you even title your investments to get the maximum benefit? And in our future segments, we're going to take this to a whole other level. Okay, so stay tuned for future episodes and podcasts and YouTube videos where we're going to talk about the next level, what you might call taxes 201, if we've been talking about taxes 101, all the things that you can do as a retiree or today in preparation for your retirement. Okay, things like required minimum distributions. Colin, what's that? That's when the government holds a gun to your head and says, take your money out of your IRA so we can tax it. That happens at 73. How you own your investment assets, as I just said a moment ago. Your Social Security taxation. Do you know that the decisions you're making in your 20s, 30s, and 40s have the biggest impact on how much of your Social Security is going to be counted as taxable against you? Absolutely. But you can still do things about it today if you're in or near retirement. And then those future Medicare premiums, if you haven't yet started to do it, Medicare premiums are greatly affected by the tax decisions, the income decisions that you make. You know, if it was all just 7 brackets and a couple deductions and credits, that would be easy. But you know, all these other planning tools are available to us. Let's not oversimplify, neither overcomplicate, but let's get the advantage of tax professionals who can also help us build a comprehensive plan for retirement. We call that a retirement freedom review. And at Lord & Richards, we'll build in a plan to reduce your taxes, give you the freedom of wealth, time, and health you deserve. It simply starts with a phone call.